2018 started was much more difficult, but I think that's normal, I would say, for the entire economy. Although economy was growing at 6%, but our challenge as an industry has been enhancing credit access to customers. The rate cap has remained a bigger concern for many institutions, I would say. But banks are also remodeling their business, what I would say as their model of the way they do business. And I say from a rate cap point of view, the industry is close to Rubicon. We are still negotiating and finding solutions, but we are not stuck on the issue of interest rate cap. But from an overall macro point of view, I would say inflation and has remained fairly well managed. Overall, if you look at economic growth, GDP expansion has been strong. My concern is that you don't see that moving down to the ordinary Wanjiku. And that's what we have to do. And that Wanjiku is ordinary Kenyans. So do they see a better growth in their lives? So sometimes I believe that's where the concern is. GDP doesn't mean that an ordinary person sees. Do they feel it in their pocket? Maybe they don't. And lastly, the industry has struggled a little bit in terms of the quality of the loan book. So because we are not having very many new loans issued, our NPL has continuously increased, which is a big measure for industry. We are now just at 12%, which is one of the highest. The last time we saw this was in the early 2000s for the industry. So I would say that much, and there is obviously new regulations. So, central bank, coming up much stronger. And I'm happy that we did not have any bank failure in the last year. We saw resolutions, which is very positive. And I would say that, overall, we've been seeing industry aligning itself in terms of assisting and enabling businesses to thrive. See, the ground shifts every day. I don't think there's an industry where people are not trying to become financial institutions than banking. I think every day a guy is thinking about an app, a lending platform. Platform has become a new normal. We call them value vampires. They want to create something else. But at the end of the day, I must salute the work that is done by the industry. Medical industry, you don't see those kind of disruptions. And today we have people from everywhere who wants to come and make a way of payment, a way of savings, a way of lending. And that's really what banking really is today, and a way of building a business. So I would say that we've been very privileged to be on the cutting edge. So whether it's our innovation or PesaLink, remains challenging, yes. Like any, you must learn the philosophy about failing fast forward. The idea of perfection, we are following a dream that you cannot always achieve. It's an illusion. Yeah. If you build perfection, you will never innovate. And I haven't seen a perfect thing. Correct? I mean, if you don't want, then the way of not being perfect is not to take a risk. So don't create a new lending solution. So just to give you an answer, I think there's been dramatic response by industry. So you talk about the whole Kenya banking sector. So if you look at lending platforms, yes, there are many people from out of the country, but 90% of all mobile lending today is coming from financial sector. Either it is ourselves, KCB, or Equity, or CBA, or Corp, or DTB, or BAC. There are many institutions doing it. The funny thing is they don't shout a lot about it. Yeah. But innovation will remain, and then new elements on, what are you going to do on blockchain? Are we going to invest? Are we going to have a solution on blockchain for the industry? So there's lending, and then there's an issue about savings. So how do you encourage more people to bring in their funds within the financial sector? And this is an area that I believe the industry is doing so well. So will we see more transformation of the strategy to fintechs? I think you will. The challenge we have is that they're not as successful. And that's, for me, it's what we see this year to be. And also perhaps banks going beyond just the traditional payments, savings, and lending, perhaps into capital markets, because that's an area we don't see an opportunity. To go into insurance is an area we don't see that much. Yeah, and yet perhaps banks have enough knowledge to build that kind of business profile. So it's been, I'm excited to see the boldness and the conviction to make investments. Let's not take that for granted. And I must salute the entire banking sector for having the confidence to push forward. So it's not been a very good year, not just 2018. So we've lost maybe 1 1.2 million, that's what we assess. But anything could be between 1 to 2 million customers. And these are the people who need credit the most. Their working capital, their short-term accommodation, and just money to run business. That has been, I would say, the most dramatic impact, adverse. And when you look at the overall numbers, I always like using numbers as a value. So if industry is lending 3.5, 3.6 trillion, let's assume 20% is small businesses. So in 2017, we saw a reduction of lending, overall lending to industry, by 200 billion. In a year, we don't even grow by 200 billion. So you can imagine, because let's assume we grow 10%. 3.6 trillion, that's 10%, right? So that's the challenge we've seen. But you say about what innovations can banks do? So we see new lending models. So banks have learned to build new algorithms. Some call them credit robots. So we see that going on. We've also seen banks being able, so we haven't found, and also KBA had a very program. It was not as successful as we wanted, but it was a catalyst. So KBA became a contrarian here and said, can we push in an Inuka program? Can we push these businesses, train them, develop them, and on the back of it, provide lending as a sweetener to be able to put a whole ecosystem of transformation. So that's, and banks did not come very strong. My disappointment is banks didn't come very strongly to support the initiative. We wanted to commit up to 30 billion. I think we did not achieve, maybe even 1 billion was very difficult to achieve. But the vision is there. And sometimes you learn from it. I come from a school of thought that show me someone who is a leader who never made mistakes. Yeah? The best way of failure is do nothing. That's how I look at it from our point of view. So don't be numb and be completely shaken and you do nothing and you say, I've not made no mistake. You will never make any progress. We must always be reimagining the new possibilities. And I say that maybe the words of Nelson Mandela is what we always look up to. It always seems impossible until it's done. So sometimes we think about PesaLink, and that's one form of, so we need to get it work, correct? But that tells you that we have got the heart and belief to be iconoclasts, to think things which are not possible. I mean, where in the world do you get all the banks thinking, despite all our differences, let's put our minds together, correct? Just recently, you'll hear banks coming together to support SMEs in 2019 to progress around providing credit. So that resilience happens by reimagining what is possible. So if I think about an element like Inuka, which you started before, this is because banks were thinking, how do we respond? So anticipating the risk. So now new risk will come from regulation. New risk will come from new players coming into the financial sector. But everyone is trying to create an app, correct? And this is my vision. And also we have to find a way of co-creating innovations through crowdsourcing. It's not only that we'll have the best ideas, but we have a platform to expand those innovations and give a customer service. Until you can get revenue from a platform or from an innovation, there are a lot of apps today. Maybe in Kenya alone, we have more than 500,000 apps, but only 1% create revenue. And that's what I would say from our point of view. There are concerns we've seen. Obviously, one area we've not been successful is on governance, because you can be resilient, but one bad practice or two bad practices can fail financial institutions. And that's something that KBA was pushing for. I don't think we've been as successful on the governance bit as an institution. Resilience is one thing to argue about banks' own performance, but you can never be resilient unless customers love the services we offer. These two are independent. Right? So we have always been internally focused as institutions. I don't think we have been able to address the love. If there's one brand that banks must look at, it's a brand that delivers mobile money payments. Because at the end of the day, that's what matters. We want banks to love their banks. That's what we're looking for. Yeah? They know that this is a plan. This is an institution that I can go to. Yeah? Not a documentation bureau where every single problem is arisen in the industry. When I look at the KBA survey last year for customer experience, this is one priority we must take. Out of the 9,000-10,000 people we surveyed, we had a lot of concerns. I'm sure, and I feel sad for KBA. We receive a lot of complaints for customers, correct? Some of those basic complaints are vanilla challenges. I can't close my account. My charges are wrong. I can't connect my mobile. My PIN the OTP is lost. Those issues we must be, until we address our vanilla problems. And we must take banking from being something customers come to do in the bank, where they go, to their everyday lives. And that's, for me, is what will define our future, is winning the customer proposition and value. What part of the wallet? We may not own the customer, but what share of the wallet do banks own in that conversation? This is what will build longevity, long-term resilience. It may not give profit in the short term, but what is the point of getting all the profits and losing the customer? It will never have value for the industry. So there's something we call the Net Promoter Score. There's something we call Customer Satisfaction Index. We should be at the same level as the best individual in the market. And in this case, it happened to a telecom provider. That's where the bank should be. We can be all right ourselves, correct? I mean, banks can only say we are good where we are. But I think the future customer will not see us as financial institutions. They will see us as a service provider. And that's the potential. Because of the nature of our industry, we don't speak as much. We're always getting disrupted. M-Pesa came in and disrupted our businesses many years ago. Banks didn't go back and say, forget about this thing. Banks learned how to remodel their businesses. And that's what banks have also learned to do. So there's a level of adaptability that I salute the industry. And that is what you show resilience. Ideation, being able to be bold enough to try new items. And I would say two elements. Banks have learned to lend to new models, so strengthen the current lending business, either to public sector or to large enterprises. That's one item. Banks have learned to innovate new platforms. So we've seen new mobile lending platforms running to the market. And the banks have strengthened their own profile of their organization structures. So I would say so we are anchored on a very strong platform. Okay? So this is an industry that can grow exponentially. That, for me, is a value, I would say. And I salute an industry which they're not crybabies. Correct? We say challenges will be thrown into us, which is how it should be. Yeah? And also, I believe that the industry had seen forward the risks. So the challenge we have today in our markets is connecting the dots going forward. Yeah? I mean, we need to grow industry that moves away from the old, the connecting the dots going back. The tracing of a picture, I saw that in kindergarten more than 30 years ago. So we always believe as an industry around self-regulation. Just run your businesses and follow the code of conduct that we've set ourselves. It's just straightforward as that. The industry, KBA, we don't have, we don't have that whip where we can go around and crack how they use. That's the role of the central bank, not ourselves. So we have always believed that once you're licensed, you have guidelines, you go regulations, you follow them. So the reason why we like to encourage more members to follow governance is largely now we are seeing a little bit much more like the banking sector charter, which has now come up, and we support it 100% as an industry and KBA. Sustainability of our business must be true. And an industry, what I have not seen much is to see beyond our own business. If there's one thing I will look for our members again and again, it's around, can we see beyond my own business, my own bank, my own license? Can I do more? Like an area of small businesses, job creation, entrepreneurship. There is no point of creating very successful individual institutions on a failed economy. It doesn't work. I mean, and I think, what will we do finally? We will build more high walls, hire more security companies for our branches. Ultimately, it's a failed environment. So that's one area we have not done well as an industry, I would say. But I salute that industry. KBA has pushed on some self-regulations. We had some sustainability frameworks. So we had an initiative called Sustainable Finance Initiative before. A number of banks participated. And I would say that you cannot predict, but I think the challenges the industry faced in 2015 have almost passed. Yeah. So and also expand. We need to find a bit way to move more than where we have been. You see, we have been thinking a little bit much more about banking. But can you kind of have an ecosystem of the financial services sector? That's what I think will be valuable. And then lastly, hold our members accountable. And it's not just us. So how do we salute? One of the challenges we face very much is also internal fraud. So how do we become bold enough to deal with that issue? Are we prepared to be? Despite all the regulations and the requirements or the Constitution's provisions, what can we do for that? But I would say that because finally, bad governance creates failure of institutions and shooks this is the confidence game. Forget about an individual bank. This is a confidence game. And also we must also deal with another issue, which is illicit flows, dealing with financial crime. Because if the industry is putting in resources or funds are coming through without good due diligence for customers, that issue can bring back. So that and obviously countering the financing of terrorism. So those two issues, not just banks, but we have to be in a big driver to drive that change where we are. So I would say we are not there yet. So if you ask me around from a scale of 1 to 10, I think we've taken off. But we need to see allies, and I will challenge all the banks to vote with their 2 feet, or whichever vote they want to vote, but to push a model for the industry's banking challenge, which is very aggressive, by the way. It addresses governance, addresses transparency, addresses customers, which is an area also we must touch on. We haven't been we have not been outstanding on customer service. I call it customer experience. Many times, the reason why customers see us very negative is because of the customer experience and the customer service.